This episode is brought to you by Prime XBT, #1 Bitcoin platform for active traders. But the most important one is a wide range of markets available to trade, from stock indices, commodities, forex, and of course crypto. So get over to primexbt.com by using the link in the description below and get up to $100 in trading money for your account. primexbt.com. I'm out of here. Hop. Yeah, it's your boy Crypto Blood, and welcome to another double spending episode. Today we've got one from Rethinking the Dollar. I just actually had Mike on for an Off the Chain episode. If you missed that, please check it out over the weekend. This past weekend, it was an excellent episode. But this one was from last week, a live session we had. Me, Mike, and Reggie Middleton. We talked crypto, we talked precious metals, equities, all that good stuff. And so this discussion was really just debating whether or not we're going to see deflation first and then hyperinflation or inflation, or are we just going straight to an inflationary environment here in the United States because of, you know it, the Federal Reserve's unprecedented measures they've been taking here. But enjoy this. Hope you like it. Make sure you share it and all that good stuff. Leave your comments in the section below as well. So enjoy. Holla.
All right, we are live. RTD Live Talk Q&A session. Excited to be back for another live stream. And I happen to have two returning guests, and got some stuff I want to share about the far guest. But Mr. Crypto Blood in the middle and Mr. Reggie Middleton to the my far left on the screen. But gentlemen, how are we doing this afternoon?
Good, man. Quarantine life.
Living the quarantine life. Good point. All right, so and so I wanted to start off today talking about the current market situation, but it looks like it was a false alarm. The Dow Jones is up 11%. So we might be good. So we may not have a market crash after all, you guys think, or what?
Oh, come on, man. That's a loaded question, Mike. No, not at all. Dead cat bounce, whatever you want to call it. And, you know, and it ran up on the anticipation of something we haven't had yet. There's no deal yet. They were waiting all day. I'm looking at CNBC. They're like, yeah, in a couple hours, we should have a deal. In a couple hours, we should, all day.
Yeah. And what's interesting, it's no deal, and everyone's on quarantine. So there's people are not working, but all of a sudden, so where's the pump coming from? Like, where's that jolt of confidence coming from? But yet we'll go from there. So Reggie, what do you think, man? Are we heading towards a depression, or are we past the point of no return, in your opinion?
Well, first of all, we have to get semantics, straight and facts. And so you said the Dow Jones was up 11%. That's absolutely irrelevant.
Mm-hmm.
I can tell you right now, anybody who quotes the Dow Jones is either ignorant and doesn't know what they're talking about, or is purposely trying to mislead.
Yeah.
The Dow Jones is a collection of 30 stocks out of a universe in the U.S. of between 15 to 25,000. Okay.
Mm-hmm.
That alone, how representative is 30 people out of about 15 to 25,000? Not very. So it doesn't really matter what the Dow does.
And they switched them out when they deemed necessary.
I'm going to get to that part.
Yeah.
So out of that 30 stocks, those 30 stocks are not historically representative of market movement. It's representative of the best you can make those 30 stocks look. So if one company is not doing well, it's removed, and they put another company in that is doing well. That's consistent, right? So it doesn't tell you how good the market's doing. It tells you how good the best 30 industrial stocks that the holders and makers of the index can make it look over a period of time. Mm-hmm. So what the Dow Jones does is irrelevant, absolutely irrelevant. At the very least, the narrowest broadband market indicator should be the S&P 500. Mm-hmm. And that's still not that representative, because from a market cap perspective, it represents a lot. But people don't get paid by market cap; they get paid by employers. So 500 is the S&P 500 is the smallest indicator. Okay, but you have the Russell 2000, which often doesn't match the S&P 500. Then you have a broader universe of 10,000, 15 to 20,000. I forget how many. Those are just the public stocks. Then you have the private equity, which is most of America, by the way. Okay.
How do you feel about the Russell? Is that a little bit better, broader?
It's broader. It's broader. But the big pop was expected, because a lot of people say this is what the market is doing. It's not the market. It's a bunch of algos pinging each other. Those are not investors. Real investors, right, don't sit there and put all the eggs in one basket and one day shoot something out 11%. Guaranteed by the end of the week, that game is not going to hold. I'm not going to guarantee, not guaranteed. But what you have is a bunch of trading algorithms pinging back and forth. Okay. The economic situation in the US and most developed countries is dire. I mean, this is Great Depression plus. Okay. The 2008 crisis, which I called on the dime. So the week before, I think we had about maybe 65 accurate calls, 65 different companies. Very, very accurate. Plus countries, plus sovereigns, Ireland, etc. Okay, called it up and down. The reason why we do that is you go through balance sheets, you look at macro trends. There's nothing positive, no reason to be buying stocks unless you're a trader. If you're a momentum trader, then you don't really care what the economy is doing. You don't care what their earnings are. You don't care if a company makes money or not. Your goal is to capture price differences.
But Reggie, if you're a long-term investor, this is a great buying opportunity. That's what I keep hearing on CNBC.
Buy and hold, buy the dip.
Yeah, if you're a long-term investor, when are you supposed to not be a long-term investor? That's my question. Some people need to retire at some point. Like, it can't be a long-term investor forever.
You see, the people saying that are the people who get paid when you buy stocks.
Exactly.
You go up to a used car salesman. Yo, this is the perfect time to buy a used car. Right? You go up to a makeup salesman. You look pretty with some new lipstick on. So, what do you expect? That's the way it's supposed to go. Honestly, I see a global depression base case scenario. Best case scenario, most optimistic scenarios, you have a global recession. That's most likely not going to happen. This is worse than World War II for many countries. For Italy, this has already done more damage than World War II at its apex. Okay. In the United States alone, the projected deaths from minimum to maximum looks like it's going to beat the amount of deaths in World War II. And that's just the deaths, right? In World War II, we actually had a booming economy because we created weapons, we created tanks, we created machinery, we created uniforms. It helped the economy. This time around, we're shutting entire industries down. Okay, just the hospitality industry is about 3.4 million unemployed for the month of March. Either currently unemployed or about to be expected to be laid off for the month of March. 3.4 million. The highest unemployment count throughout the Great Recession, right, which is the biggest economic hit since the Great Depression, was 800,000. And this is just the first month. This is before things catch on, right? What happens when all those people don't go to work? They hit the unemployment lines. That's a bigger draw on the state. The state now doesn't have any money because it can't pull income tax because there's no income. They're not going to work. They can't pull sales tax because people are not buying. Okay. And then the states then default on the municipal bonds. Okay. Municipal bond yields are shooting up. There's some municipal bonds that have 90% yields right now. 90% on a bond with revenue backed by the state. And we're just getting started. And this is just the US. China got hit harder. Hong Kong is devastated. Italy is shut down. Modi, the Prime Minister of India, just closed the second largest population on the planet.
1.3 billion. Yeah. And the thing is, that's what you have to look at, Mike. You have to look at what these leaders and these nations are doing, not what they're saying. China wouldn't have locked down their entire industry. They're gun-ho on beating the United States. They have a 2024 plan or whatever they call it to take over the United States as a superpower economically. And you see them shut down the entire country. So that lets you know that 80,000 people is not the number that were infected. Okay, so I'm seeing numbers of millions of people infected and even millions of people that died from this over there. It was a neat new report that came out that looked at the mobile data from. Did you see that report?
Yeah, I heard about it. 8 million people no longer are either activated or phone.
It's showing 21 million now.
21?
21 million non-active users between the three major Chinese mobile. So anecdotal data like that, you just got to look at that stuff, man. And I just shake my head when I see, and it's not really to be Republican this, Democrat that,
Yeah.
But you see us here in America, man, we're just simply not taking this seriously enough.
So let me ask you a question. What are your take on the John Hopkins little infographic that comes out that keep up to date that shows those numbers? And if China's numbers are straight up fake, then I mean everything else. So is Italy somewhat correct, or
no? I think Italy is doing a better reporting job. Okay, and that shows. Why is Italy surpassed China? That just does not make sense. Italy has 60 million residents. How have they surpassed? And they have the 5th greatest healthcare system. How have they surpassed China? So the data just doesn't add up, and it's just self-evident. But yet we quote it. We use that as use that China data as it's
all the data is misleading except for possibly South Korea. How are you going to count how many infections you have when you don't test? In order to count how many infections there are in Italy, let's say a population of 40 million even, you have to test 40 million people. Okay? If you haven't tested 40 million people, you don't know how many infections there are. You have no idea how many deaths there were. People die every day. How do you determine if it was COVID or something else?
Right.
Okay, so without any nation that has not tested 100% of the population thoroughly, or at least a majority that we could get a statistical extrapolation to find out what the balance of our tested was, all these numbers are just media fodder. That's basically how you generate impressions and get higher ad revenue from these news shows. So you don't know how many. New York is supposed to be the hotbed in the country. Okay, New York City is supposed to be the hotbed in the state. Okay, New York State has more infections than every country in the world except for China and Italy.
But they're testing the most, though.
Right? No, they're not testing more. New York State's not testing at all. There are no test kits. Call and try to get a test right now. You can't get tested. So the hotbed in the country, right? The hotbed, one of the biggest hotbeds is state. There's one state, 1 out of 50. 150th for the U.S. in terms of statehood is the 3rd largest country in terms of infections in the world. And I'd say less than 1% of our population was tested.
So where does numbers come from then?
Do the math on that.
So watch this. So I've had people call on a talk show, tell me, Mike, it's really bad out here in New York. I'm in whatever section they're in. They're saying that basically everybody's really, sick, and that the narrative is that it's really, really bad right now. And you're still in New York, right, Reg? Or
right in Brooklyn.
Right in Brooklyn. So is it as bad as, in your opinion, from what you hear?
You can't tell. Most people can't tell how bad it is because most people are, social distancing. But you do have people who hang out. New York is a big tourist town. If you go out to Times Square, where it's usually packed to the point where you're elbow to elbow, 24 hours a day, right? Except for maybe 3 or 4 in the morning, where it's still crowded. It's just that you don't have to touch people. Okay, it's a ghost town out there.
Yeah.
Okay. About 40% of the people in the hospitality industry have lost their jobs already. Okay, and it is a ghost town. All the stores are closed. But a lot of people aren't taking it seriously because they're not seeing dead people and sick people in the streets. And it comes from the fact that if I don't see physical evidence, I will disbelieve. But you have to understand how a virus works. There's this game called Plague Inc. You can download it on Android or Apple Store. Okay, and it allows you to play as if you're a contagion trying to kill the world. You could be a virus, bacteria, prion, or fungus. Okay, or nanotech.
That's a game?
Yeah, it's a game. Try it. It's actually very educational. The CDC actually got the author of this game to speak because it shows you how a deadly pandemic would take place. A lot of people think that the worst pandemics are the ones that have these nasty symptoms. You cough up blood, turn into a zombie, and you die within 4 hours. If that were to happen, then A, it wouldn't spread wide because you can tell everybody who has it, and B, a lot of the national and international resources go to solve it. The most dangerous plague would be one that spreads without indication. You don't get symptoms until 7 or 14 days later, or possibly never. And then you pass it internationally. And then it has a death rate of maybe 5%. So which is more deadly? One that kills 90% of everybody who gets it immediately, okay, and only gets to spread to around 100,000 people, or one that kills 5% of people who get it, and it spreads to 4 billion.
Right. Yeah. Right. Okay. Yeah.
Interesting. So watch this. I want to move right into our next subject matter, and it happens to be with the issuance or the talk of the stimulus and the checks that's going to be coming and how they're going to deliver this stimulus to the public. And so I did a video the other day talking about this digital dollar. And so what are your thoughts about digital dollar? Is this just a rebranding of a current digital fiat Federal Reserve system issued currency, or what? What do you guys think?
I didn't interesting. So, the dollar's been digital since, bank accounts.
Yeah.
So, back in the 1930s, you had digital dollars. Actually, they weren't there. They were probably analog back then. But back in the 1960s, 1970s, they had digital dollars. But I know they did introduce, which is probably something similar to a crypto style dollar. They discussed wallets, but I didn't get to go into it. That is probably more apropos. But what's behind that, the geopolitical move and the macro move behind that, I think is a more important conversation. But let me let crypto speak, and then I'll follow up.
No, I was just going to say that, I don't know if you knew this, Mike, but there was actually some verbiage in this economic stimulus package for a digital currency. Now, it was removed as of today, I believe. That language was removed.
Yeah.
And that was proposed by Chairwoman Waters of the House Financial Service Committee. So it's interesting that it was in there initially. It's not in there now.
Yeah.
That's the exactly that Forbes article I was looking at.
Yeah.
And so it's just interesting to see that. I don't know, man. I don't know what to make of that. It's not going to be in this particular one, but I'm hearing that there are going to be multiple stimulus package proposals after this one finally gets passed. They're going to need it, man. This is not enough money. They're going to have to put trillions upon trillions upon trillions to paper over this. But this is the end. We've backed ourselves into a corner, and this is the end game. Weimar Germany on the way soon. I think I see us going through a deflationary spiral, and that's evident with stocks heading lower. I think real estate will start heading lower. It's a little bit more inelastic than equities. So it's going to be a lag in that falling, but I think real estate is going to fall as well. Stocks are going to continue to fall. Bitcoin is going to fall. Gold is going to fall a little bit more as well. All of it's going to fall price wise. And then all of a sudden you're going to hit that point where it's just hyperinflation. Once all of us get our $1,000 checks and we go out there and go to the mall and get fresh and fly.
I think we're going to the mall.
Or we shop on Amazon. I don't know, whatever. Yeah. It's going to get into the, this new money is going to get into the market and really cause an issue, in my opinion.
Yeah. Reg, what do you take, man?
I disagree. Tell me, let's do a little role play. Why are they cutting these checks or offering the money?
Because they're in a position of that, because of this unemployment, everybody's at home, and we're forced to be self-quarantined. We can't produce any
revenue. Yeah, no income.
That's what we're being told. Give us the backstory.
Well, I'm going to be that dude. Okay, I'm going to be that dude that says the unpopular thing that nobody wants to hear. Okay, we're in election season. Okay, no president that I can think of, or very few, but I can't think of one, has been elected in a down market or in a bad economy.
Yeah.
Okay, Bush 1 wasn't reelected. Okay, so I think it is quite clear that there may be individuals who would like to juice this market no matter what. Okay, now that may or may not be the reason for this stimulus, but it sounds like it's quite possible. Yeah. So if they cut this stimulus and they want to boost the economy, okay, in order to do that, they need to cut the check, $3,000 per family, $1,000 per individual, 2,000, whatever the number is. Then you have to take that check and you have to go to the mall to it. You got to buy the iPhone 12. You got to buy the Samsung, S20.
They got so
Ultra. You got to go buy a TV. Okay. And in order for the stimulus to work, and then it trickles up.
Yeah.
In order for it to stimulate the economy. And if it does do it, it will stimulate the economy for maybe 15 days worth of normal shopping. Okay. But that might not be possible because the stores are not even open. But let's say the stores were magically open, everybody was back to work, and that happened. That's not going to replace the 30 days of revenue that's been lost from total shutdown. And on top of that, that's not what desperate people or people who are afraid operate. Okay, you haven't worked for the last 3 weeks. These checks won't come out for another few weeks. You haven't worked for the last month. Okay, you're afraid, you have minimum or no savings. You get a check in the mail for $3,000. I don't get me a $2,000 iPhone. Nah, I'm going food shopping. I'm taking cash out the bank. I'm sticking in, right? And I'm going to skip my credit card payment. I'm going to skip my mortgage payment. I'm going to skip my car payment. I'm conserving cash. I'm buying food, canned foods and perishables, 40 cents, $1 each. That's what's going to happen to the money. There's going to be a couple of people who will take it and do discretionary spending, but the vast majority won't.
Yeah.
Okay, so that stimulus to economy is done. Now, I'm being a pessimist. Maybe I should appeal to the better nature of politicians and economists and everybody else and say they're cutting these checks to everybody so they can do better. Okay, to give them a lifeline, which is cool, and I hope that's the case. So if that is the case, people take that $1,000, $2,000, $3,000 check, okay, and it goes right in the bank account or comes out in cash. It doesn't get spent. It doesn't boost the economy one iota.
Yeah.
I mean, I think that's probably a better case scenario, a realistic scenario. I'm thinking of the scenario that they're thinking, which is we're going to get the money. Yes, I don't think it's going to be immediately. I don't think the inflation is going to happen right away. It's going to take some time. So I'm thinking 6 months to a year out, you'll start to see the inflation from top and bottom. You remember, this is the stimulus coming in from the bottom and the top. They're giving money to the corporations, the small business owners, everybody's getting money, helicopter money. Yeah. So I think it's going to, the inflation is going to leak through somewhere. I just don't know where.
I call it inflation.
Yeah, I see the opposite. The Fed's been trying to get true inflation ever since 2008, and they've been failing. You know, input prices and the cost of living has been flying through the roof, which the Fed doesn't count as inflation. PCE has been going up, personal consumption expenditure. Okay, but core inflation is what the Fed wants. They can't do it. Neither can the ECB. They can't do the inflation. Neither could the Bank of Japan. Right? But they can't get the inflation they want. They've been trying since the last crash. Right? The inflation that you guys have to pay for food, for energy, for housing, the price of housing,
transitory.
Okay, the price of energy, right? Or at least the bills you have to pay have went up. Your credit card payments and debt services went up. Okay, expect all banks that lend to individuals to go kaput, right? Expect all banks that lend against real estate, okay, that deal in CMBS and RMBS to go kaput. You're going to have bank failures. Everybody says banks are fine. We spent just in the past 2 weeks, I'd say 800 man hours going through many, many banks throughout Europe, right, and throughout the U.S. Okay, I have a bank that's almost guaranteed to fail in Florida right now. I got 3 guaranteed to fail in Greece. We're looking at them in Spain. And this is a problem because all banks are interlinked. There's a lot of liquidity, but they have many, many more non-performing assets on their balance sheet than they have equity, right? And that's before this coronavirus issue. Now, we entered into this pandemic in a bubble. Yeah. And we entered into it in a bubble with 0 or negative interest rates and central banks with balance sheets at historically high levels. All those MBS from 2008 are still on the Fed's balance sheet. Now, they said, we're going to buy stock. They openly said on the front page of the media outlets, we're going to buy stock. The central bank is going to buy stock to rectify the problem. They're literally buying ETF shares.
Yeah, they're doing ETF shares. Okay. Yeah.
That's outright desperation.
Now, how about all those lending facilities and all the windows that they're going to open up to provide some liquidity for these banks? What's the chance? So all this boils down to basically propping up the same banks and the corporations, and I believe they're giving hush money to the population in the form of
it's a debt. Yeah, the issue is the debt market. That's where the big elephant in the room is. It's the whole equities market is just for show. They don't really care. I mean, they care about that, but all these new alphabet programs, they got all MBS, SB, whatever. They've got so many different programs they're running now. All of that is for the debt market. It's not necessarily for the equities market.
The biggest short-term effort right now is propping up the municipal bond market. Right now, you have municipal bonds with 80 and 90% rates, yields. That's ridiculous. A bond backed with the revenue of a city, state, or country. I mean, a city, state, or a township, right, is giving us 80 and 90% yields. The reason is, like I said, just the hospitality industry, right, has lost 44% of its jobs. If you walk down, it's against the law to have your shop open in New York. It's against the law to have your shop open in California, Michigan. When your shops are not open, these guys are simply not going to be able to pay their bills, right?
Yeah.
All the income that states get comes from income taxes, which you can't charge income taxes without income. The guys are not going to work. That's out. It comes from sales taxes. You don't get sales taxes without sales. Okay. Excise taxes, etc. State revenue has hit a wall. Okay. And when it's going to start, nobody really knows. Right? They say Trump wants to restart the economy soon. You actually had somebody, I think, and one of the Midwest lieutenant mayors, I think Texas, said he's willing to sacrifice his health to jumpstart the economy.
Go out here and do that, buddy.
Whatever they spoke out in Texas is a good thing, right?
Well, I like what Cuomo is. Your Cuomo is saying he's not with it. He's like, no, I'm not doing it. So you're gonna have states not open up still, even though
it's like this. Whether you open up or not, the end result's going to be the same. You open up prematurely, right? You're going to infect the work population. They're not going to be able to work, and then you shut down again. Okay, there's no magic here. So go ahead and open up, right? I walk in the office. Yeah, what's up, Rick? How you doing? If everybody stays in that office, it's a miracle. But if everybody stays in the office, they get infected, and they get infected rapidly. You sit in an office building, okay, and I come in with an infectious viral disease. It's like me going into a petri dish, right, or a test tube, jumping in, coughing on everybody, and then putting a stopper on top so nobody can get out. Right, Rikers Island, one of the largest jail systems, right, in the country, has gotten infected. A large petri dish. School systems, right? Open the school systems back up. A large petri dish. I don't know if you have kids, but I used to go in. My kids were in nursery school. The little snotty kids with snot coming out, coughing, wiping their hands. Hi, don't touch me. It spreads. Okay.
Yeah.
So you want to open the system back up. Okay, you're not going to jumpstart the economy. You're going to reinfect the economy. So you have short-term differences. Medium, long-term is going to be the same effect. Medium term, you do much more economic damage than if you.
Mike, man, this is like the perfect pin to burst this bubble, man. It's like the universe just, the Fed thinks that they had all the answers, man, and they didn't see this one coming. No one really saw the actual cause of the burst, but we knew it would come. But man, this one covers all. Like Reggie's pointing out, it's covering all bases. Like they can't win. They can't manipulate or print themselves out of this one.
Yeah. No, watch this. Gold and silver right now are scarce, depending on where you're looking at. It's hard to source. And then we have the cryptocurrency sector. Let's touch on that real quick. So what are your thoughts on, how they will fare in the end after all of this stimulus is injected around the world? How will those assets do?
Well, gold. Go ahead.
I think the crypto side, it's probably gonna take some more downturn in the short run, but over time, I think it's going to be yet another. At least Bitcoin is going to be another outperforming asset. So it's going to do well, I think. But in the short run, man, if people don't have money, so okay, the first sell-off you saw, I think, was essentially a lot of the institutional money that was in there, the little that there is, but it's percentage-wise probably a decent chunk in the crypto game. They probably sold off for margin reasons. They had to cover margin calls in other asset classes like, equities and stuff. So I think the next wave of selling is going to come from individuals. If they don't have a job, if that little $1,000 check runs out, and they don't have money to feed their families in a month or two, if we're not back up and running, then what are they going to do? They're going to have to liquidate some of their crypto assets to survive. So I think we may see one more run through of that. But overall, I think crypto is going to do very well. Gold is going to do very well. Just setting up for a great move for both of them.
This summer, perhaps? Because that gives us.
I think so. I think so. I think this summer, end of this summer, just depends on this virus, man. You got to understand, there's a wave 2 that's going to come through with this virus, and that I'm a little concerned about. Normally, wave 2 of a pandemic is worse than wave 1. We don't know if the mutations are going to be enough to where it's not, whatever they come up with for a vaccine, if that doesn't work or it does. Like, there's so many moving parts. We don't know. Mm-hmm. We don't know the answers. And so that uncertainty is what's causing all of this volatility. And it's just crazy, man.
Let's see. Reg, what are your thoughts, man?
It's a lot of questions. So silver is very volatile, hard to predict. Yeah. Gold, I'm very bullish on. Gold has actually performed very, very well. Mm-hmm. It had a sharp sell-off, but that sell-off has nothing to do with gold. Realize gold has been financialized. Okay, mm-hmm. So that sell-off was GLD. That wasn't gold.
Yeah.
Okay. And there were a lot of gains in GLD. It's liquid, and people, when they started taking heavy losses in the equity market, anybody was leveraged long, got margin calls, sell some GLD off. So you saw gold dip hard. Take a look at gold right now. I looked at it this morning with my son. Gold is $10 from its 5-year high. It was at 1666. I think the 5-year high was like 1676, something like that, or close to it. That is very strong performance considering every risk asset has fell.
Yeah.
Okay. And we have digitized gold, so we sell it as basically a private currency. Very bullish on it, right? The VE Gold system has worked exactly as it's planned, as anticipated. Crypto in general is untested, it's too young. It has no track record. I can't opine on it. But it all depends on how you put the crypto together. There's our Very, right? Despite, significant regulatory and legal issues and uncertainty, Very represented prepaid fees for our products and services, including our consultation. I consider myself, others have called me a self-proclaimed guru, but I guess I'm self-proclaimed because I predicted Bear Stearns, Lehman Brothers, General Gold Properties, the real estate crash, the commercial real estate crash, the sovereign debt crisis, Google up, Apple down, about 86 calls. So self-proclaimed or not, right?
Right.
Yeah. And I came in and again, I told everybody about 2 months ago, a month and a half, 2 months ago, right? Watch out for the consumer debt. It's going to crack. Okay. I told everybody, watch out for the coronavirus, particularly as it infected Hong Kong. It's going to crack. Okay. You can add those 2 calls to the repertoire. They came out exactly as anticipated. Mm-hmm. I'm allowing people to come in and just hold Very. They could come in and have a discussion with me. Okay. Now we have demand for Very again. It all depends on how you put the crypto together. Mm-hmm. Okay. And Very has been under siege by big, powerful entities. There's still demand for it there. Okay. Still unclear. So, I'm not recommending everybody go and get Very, but just the way I put it together and what it represents. VE Gold is also crypto. Okay. I think it's the most elegant of the digitized gold tokens. Granted, I'm biased, right? Mm-hmm. But I think I'm also telling the truth. It has performed exactly as planned. We've been doing redemptions, been shipping the metals off to people. People have been buying, trading, etc. It's worked perfectly. A lot of people say gold didn't work. Gold is almost at its 5-year high, right? Working very well. What else did you ask about? I can't opine on Bitcoin and everything else. Untested. A lot of people speculate on it, but honestly, I'm very good at this investment stuff. Very good at fundamental analysis, macro. I don't know, and if I don't know, a lot of other people don't know either.
Correct.
What else did you ask about?
So, do you have VE Silver?
VE Gold, VE Silver, VE Palladium. We're out of stock of a lot of it. Some of it has to do with regulatory battles, litigation, money. But we can still, anybody who wants some, we have to do it the old-fashioned way. You come up, you pay for it, we source it, we deliver it, and the tokens to you. We used to sell out of inventory. We have some inventory, but like everybody else, and this is a very important point here. When the price of gold went down, okay, the price of gold went down driven by financialization, the paperization of gold, okay? The demand for gold went up and silver as well. Okay, so as the price was falling through the floor, demand was shooting through the roof. Premiums were doubling and tripling, sometimes even quadrupling. Gold was selling out, right? A lot of the dealers were holding on to their gold. So there's a problem there, okay? How is the price going to fall when demand goes up and premiums go up? The reason is the price of physical, right? Or the demand for physical was shooting up, right? The demand for paper was falling through the floor because of the supply from the sell. Okay, now that that's over with, Okay, it apparently seems to be over with. Now you have the price going right back up. Will it happen again? I don't know. But in a time of extreme disconnect, gold is not a bad thing to have. All the central banks are prodigious buyers of gold over the last several years. Prodigious. If you look at every risk asset, we walked into this pandemic in an absolute bubble. Real estate was a ridiculous bubble. Stocks, a ridiculous bubble. Bonds, a ridiculous bubble. Private equity, a ridiculous bubble. Look at WeWorks, Uber. Every single risk class you could think of was a bubble. Sovereign debt, a bubble. The bubbles are being popped, and everybody says, well, after this pandemic is over, after the virus is over, we'll be back to normal. No. Best case scenario, you'll be back to a bubble. When you're back to a bubble, you still have the fall to go. That's best case scenario.
When are you a buyer of stocks, Reggie?
I'm a buyer of stocks when I feel they're worthwhile, and that's no time soon.
Is it certain sectors you see will be worth investing in first, or just the mutual funds and just some of the common stocks and whatnot? What are your thoughts? What else? What sectors? Anything in particular?
It all depends on your objectives, your risk tolerance. Tech is the cash-heavy tech companies that have a heavy cash flow and are able to do viral revenue production are strong. Okay, for now, but we don't know what the near future is. There are certain companies that do well. For instance, I'm extremely bearish on retail. I've been bearish on retail for about 5 or 6 years. Why? Because structurally, retail has changed.
Yeah.
Right. The younger generation who will be doing most of the buying, they don't go to malls as much and they don't shop. They go to Instagram, right? They pull up apps. They're very comfortable buying through Amazon. Okay. Amazon has taken about 16% of the retail sector in general, the industry, one company. Okay, without retail storefronts. What happens when Amazon takes all this retail cash and revenue and profits and drops profitability? Well, those retail storefronts, the companies go out of business, and then who's going to replace them? Whoever can compete with Amazon? Very few. Okay, so now you have the retail sector falling, you have the retail real estate sector falling with it. Okay, but you have the industrial warehouse sector increasing in price. Why? Because Amazon needs warehouses proximal to urban centers. There's a lot to think about, right? And it's hard to outsmart the guys who really, really study this and use their own capital just by looking at it every now and then. But if you look at it, the world is changing. Retail shopping, big box shopping, mall shopping is changing. The cost structure doesn't support the profits available, right? Amazon's biggest competitors are going to be all Walmart and Target. Why? Because they have the infrastructure, right? They don't have to buy these big warehouses because they have these big box stores that are in urban centers and in suburban centers. So they could fulfillment straight out of there.
Yeah.
Okay. Right, but in the meantime, all those retail storefronts, that retail real estate sector, kaput, right? At least for now. And the foreseeable future, because it's not a cyclical change, it's a structural change. The actual retail stores themselves, kaput.
And then it's going to be the death blow. It's going to be the death blow when Amazon comes in and goes brick and mortar. I think that's going to happen at some point. They're going to have.
After all this, you're saying you see Amazon going brick and mortar and open up some of those warehouses?
I do. Yeah, having those cashless, those stores where you just walk in, use your hand, boom, shop, bam, you in and out. That they're already starting those.
Now what about? I'll say I want to draw it out towards the end, but I got a lot of questions. But with that same thought in mind, what about robotics and how they're going to be using less manpower and more robotics and stuff like that? So there will be no jobs there. So if the whole labor structure is going to shift, the economy, everything's going to shift right now. Last question I'll leave you guys with: as this thing's as it blows through, eventually, some point it has to come to an end. What will the new world order look like? As far as will the U.S. still have reserve status? If not, who will be leading the charge this next monetary system?
It's too
any guess? Yeah, nobody knows. But
I was gonna say that's really hard to. There's so many moving parts.
As of right now. Go ahead.
Go ahead, Reggie.
As of right now, that I don't see anybody challenging the U.S. The euro is broke, is already done. The euro is just it's collapsed and doesn't know it yet. Actually, it does know it yet. It's just a matter of time. The Asian economies don't have a currency that the world could have faith in. The second deepest is the euro, and the euro has 17 or now 16 because the second largest economy left. Okay, 16 disparate economies, cultures, legal systems, languages, and they're scotch taped together with the euro. And
yeah,
then,
people, it's surprisingly enough, China is actually in a really bad place, especially after this virus. They were already had, economic goals to meet on a year-to-year basis that were just not going to happen. And it's definitely not going to happen now. So all their metrics and what they're using and fake numbers and GDP and stuff, they're just in a hotbed. They're in a mess, man. And they're definitely not going to be the ones to challenge us.
But what if they have 20,000 tons of gold, like a lot of people suspect they have, as a part of their backup plan to basically open up the vaults one day and see who got the biggest the weight.
I really can't speak on that and maybe Reggie can, but what I'm concerned about is a kinetic incident with China and us. That I'm kind of concerned about that because I'm hearing Trump come out saying, the China virus, China virus, he's throwing light jabs at them. China's throwing jabs back at us. I just don't want to see a kinetic escalation of this situation between us and China, because that will be maybe on par or worse than this coronavirus itself.
Yeah, I agree.
Neither the U.S. or China can afford anything too serious. We've been at war for a while, but the war has been cybernetic. The war has been geopolitical.
Right.
As for gold is considered gold because we are working on gold products for African and South American sovereigns, and a direct solution to a lot of their problems, whether it be hyperinflation like in Zimbabwe or Argentina. We can't touch Venezuela because of sanctions, or whether it's lending, right? And those are actually two sides of the same coin. You could go to the Veritaseum research site. You could download presentations that we've done. But everything centers around gold being an FX reserve stabilizer. Use gold to stabilize FX. Outside of that, there's not much more you could do with it. Okay, but you could do a lot to stabilize FX when it needs stabilization. Okay, because it's steady. And, it's not that valuable when you don't need it, but it's like insurance. Insurance is useless until you have an accident, right?
Yeah, very true. All right, well, gentlemen, I appreciate you guys taking time to join me. And so, Reggie,
didn't get any callers in.
No, we you know what? I didn't even extend the invitation, and the phone didn't ring, so I didn't put it on the thing. So, but I think I just did a good job of asking all the questions.
I put my blazer on. I thought Reggie was gonna have his blazer on. He's coming with the hoodie on. I'm like, okay, all right.
He's watching the movie, but
this is quarantine Mondays.
And so, as I mentioned, prior to actually talking to Crypto Blood before we went live, I had no clue. I mentioned to him we last spoke a couple of years ago, and it so happens, as I mentioned, I'm gonna put it on the screen here, but let me see, where is it at? It was actually to the very same day. So
that's crazy.
March 24th, 2016, Reggie, we had our first talk, and I don't believe in coincidences, of course, but it's one of the things where, damn, like I didn't plan this. So, but it's interesting. See, you had 4 years younger. So, for those that may not know, Reggie Middleton, the Veritaseum, veritas.veritasium.com. You can find out more about his project or whatnot. Then we have Mr. Crypto Blood. I don't have you. Crypto Blood.
Actually, hit the drop. Send them to dapp.veritasium.com. That's the site. You go to the application, you get all the research. You can see why anything that we back with our consultation is worth halfway. Go to Veritasium, dapp.veritasium.com, and then click the research button, click the goal, take a look at it. It's cool stuff.
Let me find. Okay, I should have been prepared.
We're going to announce bank failures either at the end of this week or next week, and we're going to be continuous through multiple countries, multiple areas, and we're the first to do that. This is super crypto.
So your prediction is that we're going to have bank failures by the end of this week. That's what you said?
It's not a prediction. It's a math.
It's a math. Okay.
It's not crystal balling. It's 1 + 1 = 15.
Yeah. So we talking about local. So we talking about the too big to fails first, or we talking about all banking system itself going to shut down, or going to have
regional small ones, right?
So these will holders of VE assets would know. Right?
Fair enough.
This is why certain crypto has value, because you have that question. It's a good question. You want the answer to it.
Yeah.
The answer was behind a crypto, then it has value. See, that is simple economics, right?
Good deal. Good deal. All right, well, gentlemen, I appreciate you guys joining me, man. As always, I'll put the information to everything you mentioned beneath this video so people can find out afterwards. But other than that, gentlemen, enjoy your lockdown, and we'll definitely hopefully connect again and really see where we're at down the line. But once again, any last thoughts you guys want to leave with the audience?
Be safe. I am a very pragmatic person, but you're not going to have mayors, governors, and presidents and prime ministers shut down the biggest city, second biggest city, the biggest states, the biggest countries in the world because it's a hoax or because it's paranoid. Okay,
right.
Come on.
Yeah.
Okay.
Yeah, I agree. Take this seriously. Position yourself to take advantage of this. Always opportunities in every situation. So, look to people like Reggie for information, and I'm always having very interesting people on my show. I had this lady from Philly, a bond trader. She's been dropping a lot of gems on us the last couple of weekends. And I think the bond market, the debt market is where the issues lie. Those are the biggest issues. Banks, that kind of ties into what Reggie's talking about. I think you're going to see some major issues coming soon.
Yeah. All right. So here's Crypto Blood's Twitter here. So make sure you guys go follow him as well. And other than that, gentlemen, enjoy the rest of your day. Thanks again for joining me. And see you guys later. Appreciate you guys for hanging out with us. If you enjoyed this, thumbs up, share this, and all that good stuff. See you guys later.
Thank you. At Reggie Middleton for Twitter.
At Reggie Middleton. Maybe not. All right. I'll put it down below. I'm sorry. Okay. All right, gentlemen. You guys be good.
Okay.
All right.